From Wall Street to Main Street to help small business owners have the same capital as corporate America and give them the same resources as a larger company. We cover business funding, business credit, scaling, business consulting, and much more. Check out the website at shieldadvisorygroup.com. Welcome to the show, The Liquid Lunch Project.
Hey, what's up, everybody? Welcome back to another episode of the Liquid Lunch Project. I am Matthew R. Meehan, alongside my partner, the Professor Luigi Rosabianca. What's on tap today, Lou?
Matt, no one knows better than you and I that navigating the financial space for a small business owner can be torturous. So today, to help us navigate these troubled waters, we have the Mensch, the OG of small business financing, Sol Lax. He is the CEO of Revenued. Sol, thank you for joining us. Tell the audience, what is Revenued? You took a classic financing instrument with an interesting twist. Tell us all about it.
I'd love to tell you, Lou, but first I got to tell you, with that fulsome introduction, I got to feel like the liquid lunch is literal. Like you must have been drinking, you must have been drinking something to get that intro.
It's not a hyperbole,
Yeah.
buddy. We're drinking here.
Yeah. All right, I got it. I'm looking for my free drink ticket after this is over. But anyway, so Revenued is created and is focused on being really an MCA replacement, right? And typically what we'll do is we'll do revenue-based financing. We'll do all the sort of neat machine learning stuff that people do on bank accounts and enrich it with a bunch of other data. And we'll come up with some capacity that we think that makes sense. And the instruments that it's wrapped in, called the delivery, is a flex line. It's flexible. It's something that somebody could draw on and use, and then close it off by repayment. And in addition to that, you have a card, right? And 55% of our utilization ends up being for less than 30 days. So people are swiping it, no draw fees or anything like that. People are using it to buy inventory or because they got to make payroll that day. And one other thing that's notable is that we'll go up much higher than most, meaning, and most line providers stop at 150K or so, and we will go up to 500-600K.
Oh, wow.
Right. So yeah, we'll go big, and we do have a great deal of comfort doing that. We've done hundreds of them, so we have good results on it, and it's good. We like it.
So, Sol, how
Yeah.
your background, venture capital, bridge fund lending, all the way to this, you've seen the ins and outs of different products. How did you guys design this one to be more holistic for the client?
So you give me too much credit. I hired a lot of guys who are smarter than me, right? So the first thing to know is, if you're running a business, is you got to be able to provide vision, but largely in terms of execution and everything else, including technology and that, you got to be able to assemble a team, and you got to give them autonomy, and you got to trust them, right? So that's like my biggest takeaway. My biggest takeaway from my experience in doing this is that there's a huge difference between having a company that's agile and believes in human creativity, and having people that are excited to come to work and don't feel like they're scared that the boss is gonna squash them because they made a mistake or something like that. There's a huge difference in that type of culture, a learning culture, versus being dogmatic and controlling. And in terms of your audience, I would say that's my biggest like takeaway. My biggest takeaway from my experiences is you build a great team and you can build great product. So how did we get here? We got here because we had a fair amount of experience in understanding MCAs. We thought that it was a product that could be replaced with something better, and we went out and we built the replacement. Along the way, we discovered that many of the players in fintech that had built something similar had really, for various reasons, mainly credit induced, had departed from this whole spectrum, this whole part of the universe. People stop being interested in less than 680 FICO scores, and they stop being interested in, larger transactions. And there was good reason for that, as well as, suffering from high cost of acquisition. So I would say a second takeaway, which is true in the financing business, but not true in tech in general. The famous line of, go fast and break things,
Yes.
right? You both heard that, right? I always say, like, in fintech, where credit is involved, if you go fast and break things, generally you're broken,
Yeah, you save a
right?
lot of money in the process.
It's very different in lending or in finance, where you're not just, and again, I would say different in processing or something like that, where you don't have a balance sheet. But if you are balance sheet driven and you're putting capital at risk, right, you actually have to balance going fast in technology with going fast in credit, right? You have to be willing to make some credit experiments and, take some money aside and risk it. But if you go big because, you're being pushed by your VCs, or because you have to show some growth curve quickly, right? That's just a downward trail to disaster, right? So that's
So
very different.
how do you balance those two worlds, right? So you're taking for granted that you're dealing with a second tier product. So
Mhm.
how do you manage that inherent risk?
So let's sort of divide out two separate levels of risk, right? One level of risk is, call it, just driving risk, driving the enterprise, and the second one is call it credit risk, right? So the first one is you can't go too slow. Like, think of it like flying an airplane. You can't go too slow because you stall out, right? You can't have such a slow growth rate that nobody wants to come to work in the morning, or that you lose backing and nobody wants to, write a check to keep you alive, or that, you can't talk to brokers, you can't do any direct marketing because it doesn't make sense, right? So you can't actually go to the point that, like, you're not moving. And just, anecdotally, in a separate way, like when we compensate underwriters, we were back doing a lot of human underwriting. We had two rails. We looked at close rate as well as default rate, right? Because if you're just looking at default rate alone, it's very easy to be very safe and write very little business, right? It's very easy to write a ton of business but blow up because you have a high default rate, right? The trick is balancing the two things. It's the same thing with running a company. Like, you got to make enough moves that you get traction in a marketplace and that you get some acceleration. At the same time, taking a big swing because it looks heroic, where you put all your capital at risk and take a huge swing at something, is very liable to leave you broken. So that's the first level. The second level, which is just pure credit risk, where you say is, how do you manage, right, a higher risk population, right? How do you write a loan, or how do you write an MCA, or how do you write any sort of financing
Sure.
to a population that is not a 2% default population like a bank? And by population, I mean just credit characteristics. They can be national, no particular creed or race or anything like that. Just, they're just a challenged business. You look at their cash flow and you see that their cash flow is less steady. It's not rock steady. It's not very, very substantial. It's not, somebody's been in business 20 years and is doing 20 million a month, right? How do you write those financing instruments? How do you take that risk? So the answer is to start with is slowly get enough experience doing it, get enough data behind it, look for patterns, and make sure you charge enough that you stay in business. And the final piece on that one is just that, typically the cycle and all the blowups that we've seen from many VC funded companies is you sort of are locked into a cycle where you have to grow by X in order to justify valuations and what you're doing, right? And the cost of acquisition, let's say, is, $4,000, right? Or $3,000 to bring a customer in the door. And the only way that that makes sense is if you give them a minimum of $50,000, let's say, right, in the financing.
Mhm.
And then you start penciling in to fill in, what's the missing fill in? The missing fill in okay, I got to give them that in order for that to make sense. I'm going to hold my nose and hope that the default rate doesn't make this not make sense, right? And that what I charge them is enough to cover, and that doesn't work, right? Because credit doesn't like being an afterthought. It doesn't want to. It's not a blank to fill in at the end with what you hope it to be, right? So the answer is like it's an art, right? That has a lot of science behind it, but at the end of the day, exactly how far you go out is an art.
Now, so you are operating in a fractured yet highly competitive, busy industry. How are you able
Mhm.
to carve out such a notable market share?
Okay, so I would push back on that and say that where we're operating right now is not particularly competitive, mainly because some of the guys who were there got carried out feet first. It has competition. The competition is largely from an alternative product. Okay, what do I mean? Right? There were a bunch of guys doing exactly this, right? Cabbage, for example, which has now been purchased by Amex, right?
Mhm.
Cabbage, a lot of noise, biggest boy on the block. At some point, they were doing, probably 20% of the market, 25% of the market for lines of credit for small businesses, right? Raised a ton of money, right? So they had their, COVID moment, which that's a whole nother story, but a very interesting story that we had during COVID. They had their PPP incident and then they had to sell, right? So that's an example where you had a line producer, all right, a line provider, a financing company that was in the same market that we're currently in that failed, right? So there were numerous stories like that, right? So basically, the lesson learned is that if you scale, right, and I think it's the wrong lesson, but the lesson that was learned is that if you scale up doing lines of credit, right, in a market that is, sub 680 FICO scores, right, you will suffer a lot of pain and then disaster, right? And also, size was an issue, right? How big can you go? So that marketplace has largely been decimated. What's very competitive is alternative products, which is MCA is very alive and growing, as well as, e-commerce revenue-based financing, which is largely like Clearco types, right? Whereas we just embed into your software. We can tell you exactly how much money we'll give you based on your sales or whatever else we're sucking out from wherever we're embedded, right? And that wave of embedded financing is, of course, very competitive, right? And growing and numerous players. But in exactly what we do right now, we're not coming across many. That answer that?
Yeah, no, it totally does. And you don't feel that the MCA fellas are competition to you? You feel that you're head and shoulders?
Of course, they're competition. We generally do not lose in a head-to-head. Meaning, from the merchant's perspective, right? One of the big defects in an MCA is that if somebody gives you, make it simple, $100,000 in a 6-month MCA, right? So first of all, you may not need $100,000 right now. You may need, $60,000, but they're giving you $100,000 of capacity. If you don't take the 100, you may never get the other 40. So you feel some pressure to take the 100. And let's say, things go really well or things go poorly. And in fact, the order you were hoping for that you took the 100K for didn't come through and you don't need it. And you turn around, you call your broker, you say, I'd like to, just give the money back and, pay some fee to get out of it, right? I'll tell you, let's see what I can do. And I'll tell you, thank you, but no thank you, right? You're on the hook for the full fee for that 6-month period, right? So it's highly inflexible. Now, from a broker's perspective, MCA pays more money than we do, right? It's more expensive, right? It's more lucrative, right? So they will, if they can, push the MCA. MCA is going to be their preferred instrument, their preferred product to sell a small business. If you can get alternative financing, whether it's revenue based, embedded financing from e-commerce provider or from us, right? I mean, certainly bank SBA is the cheapest, and you should always try that first. But if you're looking for either greater capacity than you can get out of the bank or from, SBA or similar, you don't have the time to do that. We are in sort of the first tier in terms of being less expensive, and generally afterwards you'll have the MCA, and the MCA is pretty inflexible. So head to head, we do not lose against an MCA. In the broker channel, generally they'd rather show a small business an MCA than the revenue product. They'll show the revenue product. They can't close otherwise.
So I have a couple questions for you because we brought it up with Cabbage. The COVID moment turned the funding, the banking world on its head. Traditional banks couldn't get their acts together and help people file for PPP, so they turned to alternative lenders out there to help. And you guys were instrumental in helping with PPP going through certain banks. Can you talk to us a little bit about that and how you helped everybody out in that time?
Yeah, I'd love to, but just to set the backdrop, right? We were staring at the abyss before PPP launched, right? Because just think about it. You got, let's call it $100 million out small businesses that are, the people that we gave the money to are now shut down, right? And legitimately, given the structure, not required to repay the cash as long as they're shut down, right? And you were just staring at the abyss and saying, like, should I just shut the business down? Do you just declare bankruptcy and go home? So you had two issues. One is you have all that capital out there at risk, and secondly, you have, let's say, 100 people working for you, and they're sitting on their hands and saying, what now, Sal? What should we do? What's the next thing? And it's a crazy moment. It's like, I'm sure people, who are listening to this and went through it before PPP was launched. They had to close their business, their home. Is it the end of the world? Like, what's going on, right? Putting us back into that time, it was a crazy time. I remember having a conversation with one of my board members. I wanted to continue, financing. And I said, Bob, what if you had a hospice that's financed by, taking care of COVID patients, and that is reimbursed by the federal government? Like, would you let me do that? Can I give them capital? He says, no. Like, maybe the feds won't pay, whatever. I said, Bob, if that happens, then, I hope you have like guns in your basement, and you got, a way to manufacture penicillin and an alcohol still and everything, because if the end of the world's coming, it's not going to make a difference, right? Might as well give the guy money, and this way he can keep his hospice open, right? Like, what's the problem? Anyway, that was the environment. So we had launched revenue, and I had actually showed it to Cross River Bank, right? I had a friend at Cross River Bank. I came in and presented to their senior management. They were thinking about, they like the technology, maybe they'll invest. They're one of the leading fintech banks. Anyway, I just said, like, what the hell? Let me try it. I called them up just when they announced PPP, and I said, hey, our platform could really do PPP also, right? Which was totally a fiction, because no one had a platform to do PPP.
Yeah, CRM.
Yeah. I mean, there was no such a thing. Like, who had a platform to do PPP? Like, what does that mean? There was no such a program, right? And sometimes it's sort of like, fake it until you can make it. Anyway, we did have the rudiments or something that if you did a lot of, let's in tech terms, duct tape. If you duct tape the thing together, you probably can get it to spit something out, right? And that's what we ended up doing. So, like, we duct taped the thing. All right. The second iteration of it was actually quite smooth. And we had a process that would, use the same bank statement analysis technology to do diligence to person. And then it had a diligence team on top of that and everything like that. And on the other end, we were actually, pushing out the PPP application to Cross River, right? And we ended up processing 1 million PPP applications,
Wow.
right? And funding $4 billion worth of PPP. But I have to say, we were actually very careful and reticent about fraud. Now, that totally flipped, because at the time that we were doing it, I was getting huge pressure, like, why don't you just open the floodgates, right? Feds say, don't worry, just do it, and everybody needs the money. And at that time also, there were crowds following people from the bank on Twitter, like, where's my application and everything like that. It was crazy pressure. I kept on saying the same thing, which is you do not want this to come back and bite you, right? Whatever the feds are selling today, like you're a bank and everything like that, you better be very careful in terms of what you do underwrite, don't underwrite, which is actually, I think, one of the primary things driving big banks. The big banks said, look, sooner or later, I'm going to be in front of a congressional hearing or something, and they're going to say, like, why'd you write all these PPP loans? And I'm not going to have, I got too much at stake. I'm Citibank or something, right? And we're only going to do it for people that are already account holders, which wasn't such a crazy decision to make. Anyway, we actually got quite good at it, right? We had a very low fraud number compared to Cabbage and some of the other guys. But that was the challenge. The challenge was balancing the ability to, make a lot of money and help a lot of people, and at the same time trying to avoid fraud.
Yeah, well, fraud was extremely rampant. I mean, I remember being on Facebook, and there were Facebook groups that showing you how to get your PPP money, even if you didn't have a business.
So interestingly, there was one of the ways that we did find fraud that today would be much more challenging with AI. Which actually, I was talking to one of my investigators recently. I said, like, ask them, you got to look at this. This is crazy. So one of the things which was pretty obvious, is you would see a bunch of applications, right? And they would have the same stock photography in the license, right? All of a sudden you see like 7 Lou's, your mug, like looking at me from the same license in like 17 applications. Right, you're really handsome guy, Lou, but like, why are you on 17 licenses, right? So all of a sudden you see like 17 licenses with the same thing, and somebody go like, oh, this cannot be, right? Especially like 3 of them are Lou, and it's the name of a woman, right? And we would track it back. You'd see who submitted it. You see the IP addresses. You'd stop taking any application from that IP address. You'd go yank all the applications and everything. And we would eventually get a sense of like, it wasn't just onesie twosie frauds. There were literally some fraud groups. You were able to see IP addresses in Eastern Europe, right? Wow. There were clearly some organized, haul it out on the back of the truck groups that had been organized around hidden PPP. And in one case, they especially used one of the fintech banks, not Cross River, to set up, accounts and fund accounts using it. Anyway, it was a crazy ride. Today, you would just go to Midjourney or something, and you would create different pictures, right?
Yeah, pretty crazy.
Listen, have you never been hit up by somebody on LinkedIn that doesn't exist?
Yes.
Right? Every day, all day, right? Okay. The first time I got hit up, it's by somebody that it's very transparent, like very, very, very shallow, details, right? Not compelling. And for some reason, like all Asians working as hygienists somewhere, right? Okay. Fast forward, they got hold of, Midjourney, ChatGPT, and everything like that. All of a sudden, you start finding like people that are want to communicate with you and everything like that. They went to the right schools, they went to the right companies, right? All of it like very credible. And you're sitting there as a business and going like, can I afford not to answer, right? Somebody inside this corporation who actually wants to talk to us. Maybe that's the embedded finance opportunity that I've been waiting for, right? So this part of it is getting tougher in a non-physical universe to know if you're actually talking to a real person or not.
Yeah, that's good. I mean, look, we use a lot of stuff in our business that you wouldn't even know you're talking to an AI. Sometimes AI knows more about our business than we do, and it's when I'm the verge of getting that.
In fact, I'm not really Sol. I am a bot.
Sol's on vacation right now.
That's here. Sol is out to lunch for quite a while. Sol, I'm just operating here in a digital world. No, but I mean, seriously, fraud is getting scarier. We have direct, plaid, connections to bank accounts. That is tougher to fake, right? It's tougher to make up an entire bank account that looks credible with different transfers and everything like that. But we do see that as well. You see people who are just saying like, oh, revenue-based financing, MCA, oh, fintech. How can I beat that? Right? And they're manufacturing cash flows that are, related parties and similar, trying to build up a legend, documentation that makes sense.
When I first started, there was a list of people, always the same people, you got them on the phone. They always sent you fake bank statements, but they just did it to everybody. Everybody went through it like a message.
Well, there's some real bad stuff going on, and that is something that I would warn whoever's listening to this. I mean, I called somebody who wanted to be a channel for us on the revenue product, and I said, just tell me what type of like really bad stuff do you see going on, right? What's going on out there today? Like, what are the frauds and everything like that? And he says, you cannot imagine like the level that has gotten dialed up to. And this is broker fraud I'm talking about now.
Okay.
So he said, like, I said, so what? So like, what's happening? He says, well, you get somebody calling you. He says, I can get you. He said, in your case, you'd be a prime target because people really want a line rather than an MCA. We'll say like, hey, I got you approved for $1 million revenue line, right? And by the way, if somebody calls you and tells you that, it's not true because right now we're only going up to like 750. Okay, so he calls you and says, I got you $1 million approval, right? They have a fake portal that looks like a portal. They invested in some software, so they've created, what looks like a lender's portal, right? They say, here's your $1 million line that's waiting for you. The thing is, it comes stapled first with an MCA. We got to see like you perform okay and whatever. And you got to take this $50,000 MCA. I need your bank statements and everything like that. And then that $50,000 is your fee, right, for the $1 million line. So you're not going to have to come out of pocket, right? You don't have to come up with the $50,000 it takes to get the $1 million line. I'm going to get you the $50,000. You're going to be out of pocket zero, and you're going to have $1 million line. And by the way, the $1 million line is 6%, and it's amortized over 30 years, right? Okay, so like it's your dream. Like you can go out and finance whatever you need to finance. Like you can buy that whatever you need to buy, right? And you get really excited, and it looks real. You go to a portal, it looks like a real portal, right? It's a lender portal. It has your name and their account. It's just ready to fund, right? You give the guy the stuff, and 2 days later, he says, great, you're funded. He gets you your MCA. You got to wire it out. You wire it out to an account. You never see the guy again. You never hear from him again, right? We're getting a call like, where's our $1 million line? And I'm going to call the FBI if I don't get my $1 million line, and that sort of thing. The level of fraud.
Go ahead. Merchants going crazy, and the broker just defrauded the company. Both.
Look, we have had times where people call up and they pretend to be the company, and they have gotten hold of the company's financials and access to the bank and the rest, which is very hard to do. But they are a broker of some form who has convinced the company that they're giving them financing. They're approaching us at the point they have the information of the company because, quote unquote, they're getting the company financing, and they're trying to get themselves funded and then just walk away with the money, right? So, I love reputable brokers. I love brokers and channels that are, truthful and doing good stuff. But this is an industry that has, small business financing is an industry that has collected a lot of bad actors around it that are looking to make, quick money, and that are willing to just, lie. So that is another message that I would, clearly take away from all this, which is that, whoever is looking for financing, be very careful if you're using a broker to make sure that the broker is reputable and that they're actually adding value and that their fees are reasonable.
So on that note, there are a lot of jurisdictions and states that are attempting to implement some sort of registration requirements and trying to increase the barrier to entry. What do you think about some of those regulatory regimes?
I think it'd be great, but I don't think that they're focused on the brokers. They're mainly disclosure requirements for financing companies, which is fine, right? And mainly disclosure, which is fine. There's almost no look, it's clear to me, there's almost no legislation that is driven that doesn't have a couple of atrocity stories behind it that are headlines that occurred, and that the person who is spearheading it in whatever legislature actually has personal contact with, whether it's constituent, whether it's their aunt, whether it's their father, that something like that happened to. And almost always behind those stories there is a broker story, right? Whereas someone screwed up and promised X and said, I'll deliver Y, and it turned out to be totally, Z.
Yeah. I would actually, for somebody who has broker deals and still brokers deals, I would love for them to come and do some licensing requirement. When I was
Absolutely.
I hated having to take the test, but you know what? It created that barrier to entry. And I think you need that because there's a lot of bad actors, like you said. They're getting taught. New people that just don't know any better are getting taught by these bad actors, and sometimes don't even know that they're doing something wrong. So
Yeah.
welcome that.
Look, whether or not it's legislature or its equivalent of an SRO, right?
Mhm.
Like, broker dealers and the rest, the industry would be wise to proactively put it together, right? All the funders and reputable brokers and everything, everybody would like band together and just say, look, we're going to have a central registry. There's going to be some bonding required. There's going to be, code of conduct, and you're going to get pushed out, and anybody, who doesn't behave, you get expelled, and no one's going to buy your deal any longer. It's hard to police because very often you have super brokers where, there's 5 brokers underneath. They get chased out from, one place. I want to do business. You get the paper from the super broker, and you have no idea that underneath it is a guy that you already said, like, I'm going to do business with them again. It's a tough one, but if the industry would like to continue to exist, it has to, or especially the brokers, it has to self-regulate, or it will be regulated potentially in a way that it will find, hostile.
So, Saul, we want to be respectful of your time. So, first, can you tell everybody where they can find you or reach out to you, somebody in your team, or Revenue itself, the company?
Yeah.
They need to
Listen,
find-
revenue.com, very simple. You go to revenue.com. If you want to talk to me personally, you go to my LinkedIn. You can message me on LinkedIn.
As
Happy
long as you're not a
to.
bot. You can't be a bot. No bots.
Listen, we have very discriminating bots. It knows who I actually want to talk to, and who I want to pass off to the bots.
I love it.
You'll get a bot, or you'll get me, depending on what you're reaching out for.
So, Saul, couple questions. I think we answered, but the question I was going to ask you is, where do you see the industry going? But I think we just answered that. But more importantly, what's next on the horizon for you? You've accomplished so much. What do you want to do next?
I want to be a podcaster like you. Right? It looks like a great gig. You get to meet interesting people. You schmooze, right? It sounds like you got to tell me more.
We're always looking for a third stooge if you're interested.
Let me tell you, it looks like a fascinating gig. Look, I enjoy what I'm doing right now at Revenue. It's very creative. We got some great ideas for the future. I really think that AI is going to make a huge difference to the whole small business financing arena. I'm talking about LLM stuff, not just what we do, which is machine learning.
Yeah.
We think there is going to be a huge amount of change, all the affiliate sites, everything that people find financing right now by going to Fundera or Nav or Lendio or similar. We think that changes dramatically, right? The ability to query something intelligent. I don't know if you tried this. You ever take any of your financials or stuff, dump it into an LLM and start asking it questions?
Yes.
Yeah. You like it? You like what it comes up with?
Yeah. Sometimes it's not always accurate. Most of the time it is, right?
Right.
I'll tell you some things that we've done at our company.
Yeah.
We've scraped all of our training material, all of
Okay.
our podcasts, all of our courses we make our brokers go through, and the courses that we make for our clients, building business credit all the way to understanding the basic financials, balance sheet, profit and loss.
Mhm.
Our partner's a CPA, he put that together. So it's actually, you can go on to our AI right now, ask it a question, and I can say, okay, he has 3 positions and 680 credit. What could he qualify for? And it pops up a bunch of different things. So talk to
Okay.
him. This wasn't
So,
good.
so I think that's absolutely brilliant, right? Let's imagine for a second that you know, the two of you, right? You got a lot of wisdom in terms of helping small businesses, right? In addition to that, you have empathy for small businesses. You care about them, right? If I'm a small business owner, I come into your office and I say, Lou, I need some help, right? I'm gonna feel like you feel for me, right? I'm gonna feel you care and you're gonna spend time with me and all that. Imagine we embodied that in a bot, right? With some personality, with all the knowledge that you guys have, as well as the training material that you just described. And a small business person could now start talking to you guys and getting, like, obviously they can't spend time talking to you personally. They don't have enough time in the day to do that with, you know, 5,000 small businesses, let's say, right? But now all of a sudden they can actually get something that's not quite as good, but a similar experience to sitting there and having you advise them, as well as looking at their company's financials, coming up with actual concrete suggestions, and then asking them stuff and saying, like, okay, like, am I paying too much for my insurance? Where can I get better insurance? Am I spending too much money on my financing? How much can I actually afford? Where can I get that? And having their version of Liquid Lunch. Liquid Lunch is not a bad name. Have their Liquid Lunch app, you know, go out and go get them financing. That's where this is going to, right? And it becomes less lonely being a small business person struggling to make it happen when you got Liquid Lunch in well, I was about to say when you got a Liquid Lunch in your pocket, but that would have unfortunate.
Hey, Saul, thank you so much for being here. Like I said, we don't want to keep too much of your time. Everybody, that's a wrap of the Liquid Lunch.
My pleasure. It's been a lot of fun. Very much enjoyed speaking with you guys.
Thank you.
Thank you for listening to the show. And make sure you subscribe, leave a review, and share it with a friend. We'll see you on the next episode of The Liquid Lunch Project.